Hello and welcome to Atlantic Capital Markets special video covering the exciting news affecting one of the world's most prestigious brands. Yes, the highly anticipated Porsche IPO has now been announced for this year, and some reports suggest it to have the potential to be one of the biggest IPOs in the German stock market history. So it's probably a safe assumption that most of you will be aware of what Porsche do, but for those of you who've been living in a dark cave in Antarctica for the last 91 years, they are one of the most iconic luxury and performance brands. Of course, they're best known for their cars. Porsche AG currently has 6 core models available. These are the 718 Cayman and the long-standing iconic 911 sports cars, the recently launched and critically acclaimed electric sports car, the Taycan, the luxury Panamera 4-door, and the SUV offerings of both the Macan and the Cayenne. So Porsche are going from strength to strength, especially since the brand expanded their range. In 2021, the firm produced over 300,000 vehicles, marking a new record for the company. Porsche cars are known worldwide. Around 28% of all deliveries made in 2021 went to the American market, with a slightly larger proportion sold here in Europe. However, it's Asia-Pacific, the Middle East and Africa with the largest demand, and took 43% of all deliveries last year, with the bulk of those sales being made in China. The heart of the business is in Zuffenhausen, Germany, where the company first started. All its engines and sports cars are built here, and Porsche says the fact it also produces its standard production vehicles on the same lines makes it unique in the entire automotive industry. Its second core site was set up in 2022, when it opened a new factory in Sasken, which today is responsible for producing the Panamera and Macan models. So, is Porsche profitable? Well, yes, Porsche AG is profitable. Here you can see an outline of its financial performance over the past 3 years. The company has grown sales and profits for at least 3 consecutive years and generated over 33 billion euros in sales and 4 billion euros in pre-tax profit in 2021. So, what is Porsche's business model and strategy? Porsche AG, like the wider automotive industry, is currently battling against rampant inflation, supply chain bottlenecks and production disruption. But despite this, Porsche AG has demonstrated its ability to keep growing, despite the major headwinds considering the record delivery numbers seen in 2021. Demand remains high and our order books are looking very robust, so we start 2022 full of momentum and confidence in all regions of the world, Porsche AG said earlier this year. So looking towards the longer term, the company is currently pursuing its Porsche Strategy 2030, that aims to ensure the company addresses the significant change happening within the automotive industry, whether it be the move to electric cars or the steady move towards autonomous driving. Notably, around 25% of all the cars it sold in 2021 were electric, with the sales proportion in Europe and China coming in noticeably higher. Now, although Porsche AG has made its entry into the world of electric vehicles, management have previously said that Porsche will always offer combustion engines going forward. The way it plans to counter this is by making its balance sheet CO2 neutral and by investing in plants to create new e-fuels to make petrol cleaner. So as for its competitors, Porsche is positioned in the upper end of the market in terms of pricing. However, the broad spread of vehicles ranging from sports cars to SUVs means it does compete with a wide range of other car makers across the world. So for example, its SUVs compete with other rivals such as BMW, Mercedes and Range Rover, whilst its sports car offerings go head-to-head with brands such as Ferrari, McLaren and Lamborghini. So, who actually owns Porsche AG? Porsche AG is currently owned by Volkswagen Group. The Volkswagen Group has built up a strong portfolio of brands over the years, and the two companies have worked together since the 1960s. Volkswagen acquired a 49.9% stake in Porsche AG back in 2009, before buying the rest of the business a few years later. The overall ownership structure of Porsche SE Volkswagen AG and Porsche AG is not the simplest, and some will ask, how can Porsche IPO when they're already listed? It's important to understand the overall shareholder structure of Volkswagen Group. Volkswagen is controlled by an entity named Porsche Automobile Holding SE, or Porsche SE, which owns a 31.4% stake in the business, but over half of all the voting rights. Porsche SE is also a listed entity. All of Porsche SE's ordinary shares are in the hands of members of the Porsche and Piech families, although it does also have preference shares that are roughly split 50-50 between foreign institutional investors and German-based private investors. The Porsche and Piech families are descendants of Ferdinand Porsche, who founded Porsche back in April 1931, but only released his first branded automobile, the Type 365, much later in 1948. Ultimately, this means the Porsche family control Volkswagen through Porsche SE, and Volkswagen own Porsche AG and its Porsche AG that will be going for the IPO. So, what is the plan? Well, Volkswagen have already said it plans to divide the stock of Porsche AG with a split of 50% ordinary shares and 50% preference shares. There'll then be up to 25% of the preference shares listed as part of the IPO, which would mean just 12.5% of its total shares will be floated. Now, while the ordinary shares will have voting rights, the preference shares will not, meaning those that invest post-IPO will own a stake in Porsche AG but have no say over how it's run. So the ordinary shares will not be listed and will remain in the hands of Volkswagen, meaning it will remain the controlling shareholder after Porsche AG is listed and continue to be consolidated into its own financial statements. However, Porsche SE, controlled by the Porsche and Piech families, will buy just over 25% of the ordinary shares in Porsche AG at a 7.5% premium to the eventual IPO price. So it's important to note that any interested investors must understand that Porsche AG will remain firmly under the control of both Volkswagen and Porsche SE. The free float will only include a fraction of its overall shares and offer no voting rights. So of course the big question is, how much is Porsche worth? Well, media reports suggest Porsche AG could target a valuation of up to 90 billion euros, which would make it one of Germany's largest ever listings. However, this is just media reports, and a clearer valuation will of course be sought closer to the date. But if we use the 90 billion euro valuation and work on 12.5% of its overall shares being floated, the IPO would raise somewhere in the region of 11 billion euros. Volkswagen has said it plans to pay out 49% of total gross proceeds from the listing to shareholders via a special dividend, with the rest being used to invest in the business and drive its new strategy. So why an IPO now? Volkswagen have said it was exploring the potential of spinning off Porsche through its own IPO in February 2022, stating a listing would provide more entrepreneurial freedom to Porsche AG while crystallizing the company's value for Volkswagen shareholders. Volkswagen also believe listing Porsche would help fuel the next step in Volkswagen's transformation from brand manufacturer to a vertically integrated mobility group. This should, if all goes to plan, help provide additional flexibility to accelerate the group's new auto strategy that will see it invest heavily in areas like software for autonomous driving, battery technology and recycling, and charging infrastructure. Although Volkswagen is a world-renowned brand, the company is made up of a large range of brands. They cater for the whole spectrum of consumers, from everyday brands like Skoda and Seat, right through to premium brands like Lamborghini, Porsche, Ducati, Audi and Bentley. Within this mix of brands, Porsche AG has been one of the most successful by focusing on quality and serving the top end of the market. While Porsche accounted for just 3.5% of all the deliveries made by Volkswagen in 2021, the brand generated 12% of the company's overall revenue and 26% of its operating profit. Volkswagen is hoping a spin-off can not only raise some cash needed for its ambitious investment plans, but also allow Porsche to realize its full value. Volkswagen itself is only currently valued at €92 billion, similar to the anticipated valuation that Porsche AG will achieve on its own. So, an interesting and exciting move by one of the world's most celebrated brands. Yet shrouded in perhaps deliberate complexity to ensure control remains ultimately where it currently lies. Shrewd, and yet for those who may not be able to have one of their fabulous cars parked in the garage, perhaps a share certificate with the iconic logo stamped at the top is maybe the next best thing. Of course, if you are interested and need investment advice, do feel free to get in touch with us here at Atlantic Capital Markets. Do check out our website for the phone number and contact details, and we'll be happy to discuss it with you. In the meantime, thanks so much for watching. Don't forget our weekly look-aheads released every Monday morning, giving you the key economic news for the week ahead. So don't forget to subscribe to make sure you don't miss any of those, plus our regular special videos like this one. So from all of us here at Atlantic Capital Markets, we'll see you next time.